Hello and welcome to Hot Money on BloombergQuint Live, India's first digital live streaming business news service. This is the show which gives you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Let's welcome our experts then Vinita Sharma of Narnolia Financial Advisors and T.S. Hariyar, founder and chief executive at HRBV Client Solutions, join me on the show. Many thanks to both of my guests for joining me today. Today on Hot Money, we'll discuss the analyst take on the auto sales numbers that came out for the month of February. We try to find out what's fueling the rally in Deepak Nitrite, which has rallied significantly over the last few months. We ask our analyst which is one long-term portfolio best that they are talking to their clients and telling them to start accumulating. And finally, one overvalued stock. Now, even though the market has corrected, some stocks are still trading at rather high valuation. So if it's an F&O stock, it should be shorted. But if it's a cash stock, if you have in your portfolio, that's the sign that you need to be cautious or start exiting that counter. So that's something that we will discuss on this edition of Hot Money. Let's start with the first one. The auto sales numbers that came out, some of them surprised, some of them disappointed. But overall, does this number or all the consolidated numbers that come out give any confidence of recovery that's happening? And if yes or no, which are the best stocks that you should watch out for and which are the stocks that you need to avoid here? That's something that we want to discuss. So Hari, I'll start with you. Your first initial reaction of what did you make of the auto sales numbers that have come out? Because now almost all of them have come out with numbers.
Yeah, I think most of them were disappointing. If you look at Mahindra, I think about 43% fall in sales. If you look at Tata Motors, I think it was about 32. Probably the only company that saw a limited fall in sales was Maruti. I think about 3 to 4%. So that was the only company that saw a limited fall in sales. I think there are 2-3 things that are hitting. One is the fact that the entire supply chains have been constrained in the last 1 month because of whatever is happening in China. So that is clearly putting a lot of these companies under a lot of stress. And what we are given to hear is that if the supply chains don't get rectified in the next 10 to 15 days, then a lot of the auto companies will be forced to actually shut down factories for much longer to ensure that that their factory running time balances with the raw material supply. So that's a major issue as far as auto companies are concerned, and they don't have any immediate alternatives to China at this point of time. So I think that is going to be a major issue. The second issue was that if you look at specific companies like Bajaj Auto, they managed to actually survive in the last few months because exports managed to do well. If you look at exports this month, I think it fell to about 8%. And with what has happened in China and in the rest of the world, they're expecting that exports should actually become flat next month. So that is not great news for the two-wheelers. So I think across the board, be it four-wheelers, two-wheelers, HCVs, MCVs, passenger cars, there seems to be a real strain across the auto space. So I think for us, auto remains the big pressure point in the market.
What did you make of iShares after months and months? It probably showed a bit of growth. Is it here to stay, or it will stay under pressure?
I think it is a lot of base effect that we are seeing in case of iShares, so I wouldn't read too much into that. iShares does have a strong international franchise, and one more thing we need to understand is that iShares caters to a market that is not very sensitive, unlike probably others like Bajaj or a Tata Motors, where the market is a lot more sensitive. But I would ideally say let us watch for 2 or 3 more months before taking any call on iShares.
Which is the best, since it's cautious, which are the companies that are totally avoid for you at this point of time?
See, clearly Mahindra and Mahindra, Tata Motors, I think it is a strict avoid. I would probably be a little positive on Maruti at slightly lower levels.
Okay, Vinita, what did you tell your clients? How did you, firstly, your view on how did you make the auto sales numbers to be?
So the way the auto sales numbers have come, I do not see there is a structural, change. Or on the positive side, I couldn't read into it. And already, the BS4 vehicles, they're already with the dealers for 3 to 4 weeks. Inventory are still with the dealers. And BS6, they are not able to, because they want BS6 vehicles, but then there is a component issue with most of the manufacturers. And so that is not being filled up very rapidly. So I would not say the numbers are that very good, except for the tractor industry, which I think they did quite well. Because Escorts also, they reported some 18-19% growth in the tractor sale. Mahindra on the passenger as well as on the commercial vehicle, they reported dismal numbers. But if you look at purely from the farm equipment numbers, they were pretty good. So that is one segment which I think is doing well and is showing good numbers. and which is backed by some macro theory, like this time the water reservoirs are pretty good. And it is around 68%, which for the last 4 years, it has been ranging from 38 to 40 odd percentage. So I think if that pans out well for the next season, I think the tractors can be one segment which we can look at. For the commercial vehicle segment, say for a Ashok Leyland or anything, we have to wait and watch, because the scrappage policy is very important. That hasn't been announced as yet. Nothing. So we were expecting some news by the end of Feb, but nothing has been announced as yet, and numbers out there is pretty dismal. So on the passenger vehicle side, we can wait for some launches like Maruti, waiting how the launches pan out. On the face of it, nothing very good except for the farm equipment segment.
So that would be Escorts at this point of time.
Escorts at this point of time. But then, if you look at the Escorts, they have already played. So there were two stories that can play out in Escort. One is whether they acquire a greater market share. And if you look at the product positioning of in terms of HP, so there is no segment where Escort has a very huge market share. So 20 to 30, 30 to 40, all these are like a pretty okay, 28% kind of a market share that they have. So in case if they are able to grab a better market share from Mahindra or from Sonalika or TAFE, then that should play out. On the margins front, they have done a lot already because employee cost was one of the big overhang for Escorts, and from 12% of sales they have come down to 8%, 8.5%. So one is how the margins, whether this margin, high margins that they have come out with, whether that will be sustainable and whether they will be able to grab the market share. Because already the market is expanding for tractors, but whether Escorts will be able to grab that extra market share, because for the last 4 years after FY 14, you can say, when there was a change in some product mix and Escorts sort of changed as a company as such, since then the market share for the company has remained stable. It has not grabbed any extra market share. So let's see how that plays out. All in all, the tractor numbers are doing well. Auto numbers still, Eicher, I think has a niche, it's a niche play, so Eicher, but then, nothing very great on any of the other segments.
Okay, that's the view that's coming in on the auto segment. The second stock that we want to talk about is Deepak Nitrite, and it's been on a roll. Even if you look at what's happened, yesterday it was up almost 10%. Today also it's managing to hold on with the positive gain. So let's take a look at the stock, and the rally has been clearly seen in some of the chemicals names of late. Some of them have even rallied more. But Deepak Nitrite is something that we want to discuss. Do you track this company? What's your sense on the chemical space as such?
So we have been tracking this company of late, and we see that Deepak Nitrite, there are 4 divisions. One is the basic chemical, then the fine chemicals, and then you have phenolics, and then the performance products. So in 2017 or towards the starting of 18, they had put up a plant or something for phenolics part, and at that time the prices were soaring, and because of China disruption, this play is the bet that they played. And suddenly after their plant expansion, the prices crashed. So the volumes were good. It achieved some 100% capacity utilization in some 6 months, but then the prices crashed, and the overall EBITDA margin for this product went down very poorly. So there is some around 25% margin for basic chemicals, some fine chemical also around 25% margin. But for phenolics, which they were expecting around 25, it came down to 7 odd %. And then is so now again we are seeing prices for phenolics going up, and that segment is expected to revive and contribute. In the last 2-3 quarters, we are seeing these margins moving up, and that should contribute handsomely to the profits. Now the last part is the performance product, wherein there is a big, the main producer, which was the biggest in the world in China, that has closed down, and we were expecting that plant to again come up. but then that has not got any approval. And already, Deepak Nitrite has done capacity expansion out there. So there is some 30 to 40% capacity utilization as of now in that particular product. So we see top line going up very hugely from there, and because of the price rise in this product, performance product, which is mainly it caters to the detergent segment. So there the margin is around 75% currently, which obviously is not sustainable, but say for instance 50 to 45% kind of a margin is sustainable. So we see huge top line growth as well as on the margin and the bottom line growth for Deepak Nitrite going forward. So that's the story. They have certain debts in the books, but already say for instance they have some 1,000 crore debt in their books, and this year the overall PAT is around, they'll zero in around 600 crore or plus minus something. So that's a huge cash flow that they will be getting. So they more they have taken up land in Gujarat also for more capacity expansion. I think there is good amount of top line growth lying for Deepak Nitrite. I wouldn't say go and jump into it this stock, because obviously this major trackable is how the prices for these products play out, and that's not a very easy trackable because you have to be hands on with the company, because prices, they are the main thing because of which the margins will go up and down. So that's the thing. It's a good stock and niche in the segment, and one stock which is not only forward integrated but also in the backward integration. So they are not much affected by China disruptions.
Okay, Hari, what's your sense on Deepak Nitrite? What do you make of the counter?
I think the stock has done well. We like the stock. In fact, if you look at the last quarter results, I think the profits are up about 300% year on year. I think from 39 crores last year it was about 156 crores, 147 crores this year. So there is a clear, I think, fourfold jump as far as the profits are concerned. I think a couple of things seem to be moving in favor, and if you listen to the interview of the chairman last time when the results came out, I think he was very clear that there seems to be a lot of cash flows with these chemical companies, and it is not just Deepak Nitrite. Look at any of the chemical companies. There is I think most of them are extremely cash rich at this point of time, and what has happened in China, which has actually slowed their chemical output, that is also indirectly helping, which also explains why the stock is up so sharply in the last 5 or 6 months. So I think till the time the chemical manufacture shortage from China continues, I would believe that Deepak Nitrite should probably continue the rally. And again, they are sitting on fairly low debt, good cash flows. So I think the stock probably to us looks quite good, at least as long as this the problem with China continues.
Okay, that's the view that's coming in on Deepak Nitrite. The next one we want to discuss is basically market extremely volatile over the past few days. The Nifty itself moves 100 to 200 points in a day, but we're asking our guest, some of the stocks have corrected significantly also. Could be large quality stocks, could be mid-cap, but one stock that our guests are talking about as a portfolio pick that at least hold in for a couple of years and start accumulating this counter even if it falls. So Hari, you must have told your clients there's such crash. Your clients must have asked you which were the bets that you should take. Which is the stock that you've told them now is the right time to have it in your portfolio?
See, unfortunately, a lot of FMCG companies didn't correct as much as we wanted. We would have been really happy if the FMCGs like probably a Nestle or a Hindustan Unilever corrected, but they haven't corrected. I think what we like at this point of time is State Bank of India, and we have been pushing State Bank quite aggressively for a number of reasons. Firstly, I think the stock corrected over 285 or 286. I don't know what is the exact price, but I think you get some kind of a comfort at these particular prices. So I think that is something that's working in favor of SBI. Number two, if you look at the, I've been saying time and again, the big story for SBI is the SOTP story, and if you look at the total valuation of SBI, it's about 2,60,000 crores. And if you look at the main subsidiaries, the three big subsidiaries, that is the cards business, the funds business, and the insurance business, I think it adds up to close to about 50%. And if you add up the other smaller ones as well as its holdings in other financial institutions, it's about 75%. So you pay 2,60,000 crores for SBI, you get 2,20,000 crores back as value of all these subsidiaries. So you're getting the whole banking business for about 40 to 50,000 crores. So I think it's a great SOTP story. Nothing may happen in the next 3 months or 6 months, but I think if you have a 2-3 year perspective, to me SBI looks to be an extremely good SOTP play.
Okay, so SBI is something that looks attractive to you. Which is the stock that you've told your clients to start accumulating?
So one sector that we have started liking now is pharma industry.
Okay.
And there are a lot of people who have not held it on a portfolio basis, so there are very less percentage allocated to the pharma in their books. So the company that we are liking is APL Limited, that is Alembic Pharma.
Okay.
And Alembic Pharma, so there are 2-3 things. One is it has a very good supply chain, and there has been a lot of opportunities on the shortages, and for the last 2 years they have been doing a lot of product innovation. They have invested a lot into research, and so all these time when the company was into more of new products, these 2-3 years, which has been very tough for any pharma company, they have been encashing on their distribution strategy, and through certain opportunities the top line has been maintained. So that speaks of how well the company is netted that ways, and they have a range of products going forward. They have invested into for oncology, then for dermatology, even on ophthalmics, as well as if we look at initially there was these companies, most of the pharma, they have not ventured into China, and China minus the coronavirus issue right now, but China as such, after US is the biggest market in pharma, and initially China was very closed towards having a lot of joint ventures through other companies and all, but now the regulations out there has reduced, and Alembic Pharma is the first one, I would say, to have a joint venture with the companies in China, and they have already submitted product approvals, and most of the capacity expansion on oncology or ophthalmics or even on the dermatology, most of the capacity expansions are over, and some of them will continue in by the second half of this year they will get completed, and we'll see a good amount of top line growth going forward for Alembic Pharma. Even on the domestic front, they have a very good presence in the kind of complex generics that they have, and there also we are seeing good amount of growth going forward. So I think all the capex is already done, and they have product approvals. On the where most of the pharma companies are suffering is whether so none of the FDA issues or anything. Alembic Pharma, you must have not heard much of any kind of nuisance out there. So I think it's a clean stock and well poised for the next kind of growth going forward.
Okay, that's the view that's coming in. SBI and Alembic Pharma are the two stocks that you should have on your portfolio, and some of the stocks still trading at rich valuations, probably must have run up. One stock we want to ask our guest is one stock that probably they believe that the rally will halt and there could be potential downside. Which one is that? Which one do you feel that if it's in the F&O it could be shorted, but if it's a cash stock should be out of your portfolio?
So see, Darshan, the way we look at it right now is, the market right now, if we assume that it is trading at 18 times forward earnings, we and with a top line of less than 10%, bottom line less than 10%, that kind of, so any stock which has a greater top line, bottom line growth from the market, and or any stock which has a lesser sales pad growth from the from broader index Nifty, they are the ones where we should go and look for shorting opportunity. But the situation right now is, if you look at the market, the entire stocks are very balanced. I would say the last 1 year the market has moved in a very stock specific approach. So if you look at, there are many spaces, like if you go for retail, there are stocks which are running into 6.5 times EV upon sales. But if you look at their growth, they are running at 45% growth. If you look at in the same sector, if a company is growing at 10% top line growth, their valuations are also 1.5 to 1.5 times EV upon sales. So not market is very balanced as of now. One stock that we can say I would not stay go short, or I mean sell for some time, I would say, but not as a portfolio stock. I would not say you need to get out of it, and that is MGL, because in MGL we are not seeing a top line growth going forward. So in the 9th and 10th CGD rounds, they have not participated, they have not got any GAs, and volume growth going forward looks to be tepid, and even on the margin side, so this year has been a little different, but then going forward the margins would also reduce. So one stock that I would avoid is MGL. You better have IGL or Gujarat Gas in.
They make a better
pick.
Okay, that's the view that's coming in. MGL, which according to you probably is a stock that probably is overvalued now.
Well, the stocks I'm going to talk about are not stocks that are rallied, but they are stocks that are actually corrected. And I think there are still a very structural downsides left in these stocks. One is IndusInd Bank. Irrespective of what happens, the top management, now that there's going to be a change and the new CEO is known, I think there is still a lot of, I would say, opacity as far as the portfolio of this particular bank is concerned. Yes Bank was an extreme case, but I think IndusInd Bank, in my view, is one more bank where there is a lack of clarity on how good or how bad is a portfolio. So till the time that happens, I would be very negative on the stock. And if you look at it, there have been serious divergences between the NPS they have shown and the NPS that RBS has asked. The second stock we dislike, or we are asking people to get out, is Bandhan Bank. Although now they've been permitted to open new branches, I think there's an over dependence on the microfinance, and with special focus on the east and the northeast. And those are the most volatile areas at this point of time, and the business is badly hit. So we are negative on both Bandhan Bank and also negative on IndusInd Bank, and we've been asking our clients to get out of both these stocks.
Okay, that's the view that's coming in on stocks, MGL, Bandhan Bank, as well as IndusInd Bank. That's been spoken about today. But with that, it's a wrap on today's edition of Hot Money. Let me thank my guests, Vinita as well as Harir. Thank you so much for coming in today. Ask BQ comes up next. Stay tuned to BloombergQuint.